Hey Rick, happy Tuesday.
Happy Tuesday. It's no rain today, so it's a no rain Tuesday, which is kind
It
of
is a
nice,
no
huh?
rain Tuesday. The sun is shining. The time is changing this weekend.
Oh, is it this
Spring
weekend?
is,
Oh
yep,
my
spring
gosh.
is officially here. We can wipe away our winter, uh, drowsiness, wet weather,
Mhm.
mud, silly drivers, and let's move on with our life. Let's move right into spring.
Amen. I'm on board.
So, this week you chose the topic and you're going to
Mhm.
lead our call. So, let's
Yeah,
hear about
thanks. It's all good. Yeah, thanks. So we're going to talk about 5 facts about HUD or FHA loans.
it. I love it. FHA loans. So, I hate acronyms when I'm not in the biz with somebody who uses acronyms. So, tell us, what does FHA stand for?
Federal Housing Administration.
The
That is
Federal Housing
FHA.
Administration. Got it.
Yeah.
And what does FHA do? What's their deal?
Well, they're a government agency that insures home loans. That's
Mm-hmm.
their primary role.
Mm-hmm.
That's what they do. So let's talk about that. That's a good place to start. So why do we have FHA? Where'd this come from, right? Well, it originated way back in 1934.
Oh, wow.
And the reason was because in those days, the housing market was, of course, a lot different in terms of the financial markets. There was not a liquid financial market. There was no mortgage-backed securities, none of that kind of stuff. And so housing loans are very difficult to come by. So the housing market was pretty much flat. There's no financing. So HUD came in and decided, okay, well, let's create this FHA program to create home buying opportunities for buyers.
Mm-hmm.
And that's how it started out in
Mm-hmm.
1934. So it's evolved a lot, of course, over the years, but it's a great program.
Fun fact. That's how
Yep,
Tim and I bought our first house, FHA loan.
it's a great way to start. It's a very
Yeah,
good way to
got
start.
us in.
People,
So we certainly didn't have a 20% down payment on that
no,
whopping $135,000 that we spent.
yeah, good for
So
you.
yeah.
Good for you. So that's fact number one. Fact number two, this is what people don't really know, is that with FHA loans, they're a lot more liberal or more forgiving on credit issues compared to, say, conventional.
Mm-hmm.
So on FHA, you can actually get a home loan as little as 2 years. That's right, just 2 years after a bankruptcy
Mm-hmm.
and 3 years after a foreclosure.
Mm-hmm.
So you don't have to have perfect credit to buy a house with FHA. They're a
Mm-hmm.
lot more forgiving than other types of loans. Okay. And by the way, the FHA loan, as you mentioned, it's only a 3.5% down payment
Mm-hmm.
requirement. So it's the lowest program pretty much in the market that makes good sense. Okay. So on the credit issue, really fact number three is that they don't require the higher credit scores. So with FHA, you can do a 3.5% down payment down to a credit score as low as 580. And if you're
Mm-hmm.
between 560 and 579, you can get a loan with just 10% down.
Mm-hmm.
We don't get a lot of those types of requests, but the point is, you don't have to have a 700 plus FICO score to get a good loan.
Right. Right.
You can do loans with 630, 640 credit scores and a bankruptcy 2 or 3 years ago and still get a
Mm-hmm.
really, really good home loan.
Mm-hmm.
Okay.
Mm-hmm.
Um, the other thing about FHA is their mortgage rates are almost always lower than conventional mortgages.
Mm-hmm.
So it's a better rate, better payment. Okay.
Mm-hmm.
Typically, what I'm seeing, depending upon where the market is, those rates are about a quarter to 0.5% lower than a standard conventional mortgage. That's a
Mm-hmm.
pretty good number.
Yeah,
Okay.
I think that is a good number. I've noticed that. I have not seen an FHA loan in forever. Have you seen people? I mean, where are all of our first time home buyers that don't have any money? Like, you know,
Yeah, I love the FHA loans. They're great programs. I just think there's not enough awareness of it in our area.
really? Because it used to
Yeah, I
be,
mean,
I shouldn't say
yeah.
don't have any money, don't have, they can qualify and they can save whatever
Hmm.
money they have. And we didn't have any money. That's why I said that. When we bought
Hmm.
our place, we had to borrow money and that sort of thing. But
Hmm.
yeah, gosh, I mean, I haven't seen an FHA loan and we used to use them all the time.
Yeah,
FHA,
I love them.
VA.
Yeah. Mm-hmm.
Mm-hmm.
They're great loans.
They're great
Um,
loans. They're great loans.
I
And I know there's mortgage insurance because you're not putting
mhm,
20% down. What does that look like?
right. Well, yeah, there's mortgage insurance, but it's for a good cause. So an FHA loan, they actually lowered the monthly insurance a while back. It's now 0.5% per year on the loan amount. Then they have what's called an upfront MIP. Mortgage MIP, by the way, is mortgage insurance premium.
Thank you. Mm-hmm.
It's a different than conventional. In FHA, they call it PMI, which is private mortgage insurance.
Mm-hmm.
The equivalent on FHA is MIP, mortgage insurance premium.
Mm-hmm.
Has the same function though. Okay.
Mm-hmm.
Now on the FHA, the one thing that's different, in addition to the monthly mortgage insurance, you have an upfront. They call it upfront MIP.
Mm-hmm.
The upfront MIP is 1.75% of the base loan amount, and that's added to the loan amount. So it's not out of cash out of pocket. It's just
Mm-hmm.
financed into your loan. So it's not a
Mm-hmm.
big deal. Okay.
Mm-hmm.
So why did they have that? Why did they have the MIP? That's the next question, right?
Mm-hmm.
So here's what HUD does or FHA does. They actually have a reserve pool. They put that money aside into a reserve,
Mm-hmm.
and so that reserve is designed to cover the deficiencies on foreclosures.
Mm-hmm.
That's it. Okay. So when a lender does a loan, there's a couple of things that have changed over the years. When a lender underwrites and approves and closes an FHA loan, they're doing that to the FHA guidelines. Okay.
Mm-hmm.
Lenders are required, by the way, to underwrite to their guidelines. Now, years
Mm-hmm.
ago, I think they changed this, as I recall, around 1982 or 83. It used to be that FHA, you had to send those loans to Los Angeles, downtown LA, or Santa Ana, if that was the case. And then they would underwrite the loan and send you back the approval. They changed that process where they gave that responsibility to the underwriter of the individual lenders. They call those a DE underwriter, so direct
Mm-hmm.
endorsement underwriter. Now,
Mm-hmm.
so the underwriter approves the loan. So then when the lender sells that loan to FHA, FHA insures that loan against loss.
Mm-hmm. Mm-hmm.
And that's what the FHA MIP does.
Mm-hmm.
And so we had a market, gosh, I want to say over 20 years ago, where there's a lot of FHA foreclosures. And so all the money in that pool funded all those deficiencies.
Mm-hmm.
That's what that's used for.
Yeah.
But people complain. They say, "Oh, I don't want to pay the MIP." I get it, but guess what? It's a 3.5% down payment. Without that
Exactly.
MIP, without that MIP, there's no program.
No house, no program.
Yeah. So it's really a great program. And by the way, it's not forever. Most
Mm-hmm.
buyers, within 2 or 3 years, will
Mm-hmm.
refinance out of that loan to a conventional mortgage and take out the MIP.
Mm-hmm.
So it's not
Right.
necessarily forever.
Mm-hmm.
Okay. Let's talk about what FHA is what it doesn't do, what you cannot do with FHA. You cannot do a second home
Mm-hmm.
or investment property. That's it.
Makes sense. Mm-hmm.
Yeah. Although, by the way, you can do units. You can do owner. This is a great way for lots of buyers to get into an investment business. They buy units with an FHA loan, and they live in one of those units.
Right. Right.
Then they stay in there for a while. And then they move out and buy another house. Now they've got units with a 3.5% down payment at a great rate.
Right. I know. I love
Great
that.
way to start there too, which is
Exactly.
very common, by the way, in those markets.
And I know there's also, FHA loans for property rehabs and that
Yep,
sort of
that's a
thing,
whole
but
different segment.
we don't see those too much.
Yeah, we don't see that.
Unfortunately.
That's a whole different segment. Yeah, they're great loans, but yeah, we don't see them much here. The one thing I do want to say about the HUD program with FHA is, we have this, we talk about this maybe some other time, but the short story is this. We have all these condos that are now what we call non-warrantable condos.
Mm-hmm.
Because those are guidelines that Freddie and Fannie set aside for how they underwrite condos.
Right.
The guidelines for HUD or FHA are different than Freddie and Fannie.
Mm-hmm.
And so we have this very little known program, and some lenders can't even do it. But generally speaking, HUD will go in, or FHA will go in and approve the entire community.
Mm-hmm.
Now, almost all those communities are now expired. They've lost their approvals. What we will do, and especially in cases where it's a low down payment buyer and the project is non-warrantable, we'll go in and do what's called an FHA spot approval.
Mm-hmm.
So we'll just do the approval in that one unit, which is
Mm-hmm.
very, very cool.
Yeah, it is very cool. Oh, I wanted
Yeah.
to ask you, what are the loan limits in Orange County for FHA?
Yeah, great question. I was going to get to that. Thank you for reminding me.
Oh,
The
sorry.
loan
Sorry.
limits in Orange County are
Mhm.
$1,149,825. Pretty
That's good.
generous.
That's a good house. Mm-hmm.
Yeah. So you can buy a house for over $1 million with a 3.5% down payment.
Mm-hmm. I like it.
Pretty cool. Yeah.
Mm-hmm.
I love the FHA. They're great loans. I wish that we would do more of those.
Right.
I think we also, in my opinion, I think we need to educate some more of that realtor community, because I oftentimes will call a listing agent on an offer and they right away, I don't like FHA loans. It's like, no, no, no. Here's how this works. They've
Yeah.
got to
Don't be
stop that
silly.
mentality.
Yeah.
Yeah, it's a
Yeah.
great. They're not less qualified buyers. They're great
Right.
buyers.
I
And
agree.
by the
Yeah.
way,
Sellers have a
the
real,
appraisals. Yeah, I'm sorry. Go
yeah.
ahead.
No, they have a real adversity to lower down payments. But like I always tell you, if you're
Hmm.
approved, you're approved. Period.
Yeah,
Doesn't
still
matter.
cash at
Yeah.
closing.
Yeah.
Well, you and I
Exactly.
can both attest. We've had buyers with 20, 30, 40% down payment, and they're barely getting to the house,
Yeah. Exactly.
scraping to get
Yep.
in. So,
Yep.
and so the big down payment does not mean they're more qualified. It just means they have a bigger down payment.
Mm-hmm. Mm-hmm.
That's all it means.
Agreed. Mm-hmm.
And by the way, I do FHA loans. They're really well qualified buyers.
Well,
Very
exactly.
super qualified buyers. Anyway,
Oh,
so
good.
that's it for FHA today.
I like it. That is a nice FHA recap, and I appreciate the effort you put into that.
Thank you. Appreciate it.
All right, we'll
Love
see you
FHA.
next week.
All right, Megan. See ya. Take care.
Bye.
Bye.